Welcome to the Bank of Life podcast. I'm your host, James Neathery. I'm excited about today's show, even though it's not a long form episode. What we've done, we've gone back and taken clips from previously released episodes on particular topics and points. I think they're powerful. I think they're worth listening to. So thank you for listening, and hope you enjoy. You know, somebody sent me a video on and it was a TikTok or a short. I think it was TikTok, where this young, very well-spoken, good-looking guy was talking about.
I don't remember making a TikTok. No, I'm kidding.
He was talking about, and very authoritatively, talking about, you know, these particular coins, you know, cryptos that are just blowing up. And they're going to blow up so much that you're really going to need to introduce the IBC. And that's why the friend sends it to me, because it was talking about IBC. And this young man, I mean, he just went deep into, it's like, okay, these are going to go, you know, if you have this much money in this position, or you've got this, you own this many coins, you know, and I don't really want to name the coins. It's probably like XRP or whatever. And it's going to go to $27 million. And then at that time, you know, you've got to be able to have in place, or you would want to at that time have in or put in place, you know, the exotic trust formations. And, you know, and we got the lowdown. We got to hook up with the people that can do all this, right? And then you want private, he didn't call it private placement live, which is exactly what it was. He was saying, you got to take those assets, take them to the insurance company. We've got all the connections to do this, so then you can borrow against these assets. And then talking about all the tax-free in conversation under 3 minutes of how you take this hope for projected $27 million windfall that you've got because you picked all the right coins and they did perform as he's explaining. And then the conversation going right through all of this complex, but he conveyed it in a very simple way, right? Very simplistic terms, complex trust work, then to get, you know, into a life insurance contract. All right. And if you think private placement, you know, you Google it up and you can go down the road on that and learn all you want about that. It's just another gimmick in the life insurance industry, my little humble opinion. And so he's creating in the mind of the listener all of these beautiful things, and he didn't know shite about either one of them to the point that he should be speaking about them, in my opinion. Anyway, it's all that quick stuff, though. You get 1 million views or whatever. I don't know how many views he had. And, you know, it's just what you've got to step over an awful lot of bull hockey out there in the big wide world to get to the meat, in my opinion. And here, I love, you know, we're talking about the CD sisters. And, you know, I just can't miss the opportunity. They spent 7 years capitalizing Illustrated. Nelson Illustrated 7 years of premium. So they forego the new car that they wanted, the purchase, for 7 years. That right there eliminates about 90% of the people in the big wide world. I don't have the maturity, the intellectual maturity, the intestinal fortitude to say, no, thank you. I want to build capital. And I know this is an illustration. I get it. And I actually know what happens in year 8 and beyond. Was that premium paid, or was that premium not paid? Was that policy, did they use an option and exercise a contractual, not an option? Did they exercise a contractual right that exists only in whole life insurance? Did they reduce pay up? Did they premium offset? You know, what's going on there? It's a beautiful illustration. I'm not picking the illustration. I'm just saying that that's one page of an illustration. And most people, agents included, don't really know what's going on there. And I'm only bringing that up to tie back to comments that I make, and I will never quit making them. Structure matters. All right. But let me say, too, that you can bet these girls didn't buy this life insurance policy so they could finance a car in 7 years. No, they bought life insurance for the death benefit and the cash value. Right. And then Nelson, compared with the CD rates and all that in 14 years before, the deferred pleasure, the deferred ability to continue buying car, controlling the banking function, is 14 years before the life insurance policy I'll pay. That's going to knock out about half of the other, about half of the 10% that remains. If the ability to forego pleasure for 7 years, 8, 9, or 10 years, whatever that may be, knocks out 90% of the people. And then it takes them another 7 years before this method is clearly and indisputably a better choice with better results. Another 7 years to clearly be able to demonstrate that, right, numerically. That's going to knock out, I don't know. I'm just saying half of the other 10% that remained. And I think it's important. If you don't have the ability to either apply your discipline, create discipline, and then stick to it and pay a premium, this is probably not a good idea for you. And I'm not a shill for the life insurance companies, but you can't get into the banking. You can't control the banking function unless you control capital. And you giving me money in a third-party agreement is not, and then me going applying that and maybe even re-lending it or whatever, is not controlling the banking function. The man who originated the loan, the individual, the entity, they're controlling the banking function.
I think that part of just how much control you give away of your money and I think, but if you don't know where else to put it, like, it's better than putting it nowhere. It's right. It's better to have saved it in a bad place than to have never saved it. And, for many years I didn't save there, and I didn't have a life insurance policy that I was funding. So, for those years in between when I didn't know better or didn't know that this existed, I probably wasn't the best steward of my money in those times, but I just didn't know. I knew where I didn't want to put it. So I invested in my businesses. I invested in myself. But I wasn't using every tool that was out there. And so I think that's why whole life and understanding just the short-term benefits of it, the long-term benefits of it. And, it does take time, like you say, it takes time to build these policies to a place where it will provide the things that will provide, but that time is going to go by anyways. I'll be, every year passes and you get closer and closer to the performance that you see on the illustrations. And like you say, it will probably even potentially outperform that. But if nothing else, there's at least the guarantees of what is there and what I've contributed and the tool, how I can use it.
Mm-hmm. And then, what can you do? What can any of us do? What can each of us do in a 10-year time period with the capital that you do have access to? Oh my gosh, the only limit is between your ears. That's it. So, and I agree that this is a habit that we should all have, is saving money somewhere, understanding the difference between saving and investing.
Yes,
and then,
that's true too.
Yep. And then recognizing that the best investment is you. The best investment is you, your health, your intelligence, your knowledge, you, right?
Yeah.
And then, of course, especially, the all-American family, we're all working, and then enjoying the time that we're not working. Then if you're in business, we're all building. And the idea of having to worry about your money is just an added burden. So if you have a strong foundation, a clear path, and you start, the earlier you start, no question, the better it is, because the longer that, whatever that is in existence. So I'm just saying, if, we have a clear path, it doesn't have to be esoteric, it doesn't have to be presented better than it is. I mean, if it's like when it comes to the infinite banking concept, correct foundation, correct structure, get to it, do what you were going to do anyway. Nelson always said, and he's so true, that we should all be in two businesses. Whatever it is you do for a living, and then you should finance what you do for a living. So that's very easy for the entrepreneur to understand that and to see that. And then it's a matter of capital. How much capital can I redirect or use as a premium, a cash flow, right? Loans, loan repayments.
Yep.
And then, but for the all-American family, it's the same. That every household is not really different than a business, right? There's an income and there's expenses, and we're all financing major purchases. So you don't have to be a great big producer and entrepreneur to practice the infinite banking concept. You don't.
Right.
So it's a beautiful thing.
Like you always say, like the illustrations, just move the zero to wherever it feels good for you, right? I mean, the concepts are the same. Just move the decimal point, delete some zeros, start wherever you can. But, I mean, I love that the book brings up just the equipment financing and, our car purchases. I think, I mean, I don't buy cars that often. I'm kind of one of those people who buys a car and keeps it for 10 years. But, I think the concept, you can see it, right? And I think it's a tangible thing. We've all probably done it, right? If you're over 30, at least, you've probably at least bought one or two cars in your life. And I probably bought more cars when I was younger. And now I like this one. This is fine. But I think that idea of trying to wrap your head around, like, what do you mean I need capital? Well, it's like every time you go to ask for a loan, that's capital, right? You're requesting it from someone else, but why not just use your capital? And I think the other thing that was really attractive about the whole life banking, becoming your own banker, was this idea of using your money twice. Getting two uses out of your dollar. Like, so you pay for premium, but then now you have this place that you can borrow from, and that then I can repay it on my terms and when I need it, and not have to necessarily go to a bank to ask for that, but to become my own banker. And so I loved this idea. And what I'm using my policy for is to help me pay my taxes. So I always saved, because I'm an independent contractor and my own business owner, I'm saving every month for my taxes. And so that's how I funded my first policy. And then I used that and then just repay myself the money I save every month anyway. So that's my idea of, I have this place I was saving for my taxes anyways, and then I was already going to pay a premium, and then why not just continue to utilize that?
We believe in the system. Like, there's people that just believe in the system. So it's frustrating to know that, you believe in something and it's working against you.
And then your friends, not your friends, but our friends in general that believe in the system and they're all in, they almost look at you like you're suspect.
Right.
What, you mean you're not drinking the Kool-Aid like I am? Right. What's wrong with you? And of course that happens in any environment, even in the infinite banking world. A bunch of life insurance agents get together and they're not all drinking the Kool-Aid from IBC, they may look at each other a little bit of suspect.
You know what I think about when I think about, they are so savvy, the powers that be is. Not only that they create the system that ill affects you, but then they foster the mindset that makes it complicit for you to function in it. Then they give you a lens, they give you the glasses to see it their way. And then they create the options. So you know how you might get mad at Coca-Cola and go get another product? Well, Coca-Cola own that one too.
Yeah. The opposition.
Right. So you think you're making a choice, and you really just feeding right into the system. That is some serious thinking.
Yeah. It's pretty cool. It's changed my life. I know that. The infinite banking concept, Nelson Nash, and it's changed the lives of an awful lot of our clients and their families and people that I'll never get to meet, people that Nelson will never get to meet on this side. But it's a big deal, but it's very simple too. There's nothing complicated about it. It is, we started off earlier how life insurance has really been beat up, in the financial world. and you look at all the characteristics of life insurance, whether you do the pros and cons or the Ben Franklin, or just like really start looking at and considering the characteristics of all the financial products that are pushed into your face. And then you learn about and understand or just see the characteristics of life insurance. And then, you know, you look at the banking process and all the characters in that play, you know, whether it's from an entrepreneur standpoint, a business person standpoint, or just a household standpoint. You look at that whole banking function and who's controlling, who's profiting, and you put those things together, and it's not really that hard. It's all there if you look. But if you spend a little time looking at each of those, it's like, oh my gosh. Then lights start going off, and then if you can get past the word life insurance, right?
Why is that?
I think it's from the narrative. You know, Wall Street doesn't like life insurance as a product. You know, they're all competing for everyone's capital.
That's right.
Cash flows. And, well, man, if I put a bunch of money on Wall Street, what are they going to do with it? They're going to practice banking. And
they sure as heck are. They're going to make the spreads. You're going to give them your control of your capital. They don't need to own it. They just need to control it.
Yeah. It's like everybody else is doing it, and I'm just going to go to work, punch a clock, or I'm going to go do what I'm doing. And forget about it, set it and forget it kind of thing. And don't want to vet what's really going on, you know, in the financial world and the banking world. And but it's so worth it. And it's educational, but it's kind of entertaining. You know, once you get past the anger.
Yes.
You know, like I've been duped or, you know, born into this debt slave construct and didn't even know it and had no choice in it. I mean, once you get past the almost gestalt type in your face, this is going on, whether you have seen it or haven't seen it, whether you agree it's happening or don't agree it's happening. If you just look and it's like, oh my gosh, it's like, dang, these guys are smart. These bankers are smart. You know, that's the level of entertaining.
They're highly intelligent, and they've been studying for a long period of time on the finance side of the equation.
They've mastered it. I believe it goes way back. I refer to it as the Babylonian banking system is exactly what we have today.
Yeah, absolutely.
But it's also entertaining, much more entertaining. Once you see that, if you determine that the infinite banking concept, becoming your own banker, is worth implementing in your own life, then it's a whole nother game. It's a whole nother mindset. It's a whole nother perspective. And it's a whole nother level of entertainment. It's like, no, thank you. That's a great opportunity, quote unquote, you have. I'll pass. Thank you very much. And I'm just going to go finance what I was going to purchase anyway.
Yeah.
It's cool. It's very cool.
It is very cool. Yeah. It is powerful. And again, like you said, getting past the anger, if that resonates with anybody out there, you went and you looked behind the curtain, you did some research, and you were like, I cannot believe this is going on. Oh, this is criminal. How are they getting away with this? And then you realize, like, man,
with ease is how they're getting away.
Yeah. You're like, oh my gosh. And then your cry for justice, and you just kind of like, and then you're like, well, now what?
Yeah.
And that's the thing, you come to this realization that this is going on. I believe it's going on, and it's probably worse than what I think it is.
Yeah.
And then now the question is, okay, you're still you.
Yeah.
You are where you are. Now, what are you going to do about it? And you can either stay angry or you can try to do something about it. And I couldn't find anything better to do than take back the banking function.
There's a gentleman in town that he has a really nice restored 1972 Chevrolet. And I'm like, man, I'd really want one of them. That would be really nice. And I could go buy one. And they're $25,000 to $65,000 or more now.
Yes, sir.
Right. And I'm like, I don't want one. I'll enjoy them and admire them when I see them, but I don't want one. Put it in the barn, drive it every 6 months. I get that. But and then too, I want to bring out a point here, because I think it's a very valid point and an important point. You do not, the individual, you, the listener, me, you, Greg, do not have to do anything to make that policy better than it is if it was structured properly. And structured properly means for the individual policy owner, right? Their circumstances, what they want to do, what they've been doing, what they understand. And so when it's structured properly, there's not one thing that you can do to make that policy better beyond paying a premium. Not one thing, right? So this idea that, I've got to do something else, or I'm not practicing honest banking is just not true. It's not. There's nothing wrong with proper capital formation, proper capital long-term, proper capital formation. There's nothing wrong with that. And then typically, and you wake up, I think you mentioned the 7-year mark, or it could be the 5-year mark, could be the 3-year mark, could be the 4-year mark. You're just steady paying premium. It was a lot when you first started. You didn't think you'd ever be paying that kind of premium. And then you start looking at the cash values in the 3rd year and the 4th year. I'm not saying that there's not cash value in the 1st year or the 2nd year. That's not what I'm saying. Mm-hmm. I am saying you wake up at some time in the future and you look at those statements and you've already seen the illustrations. You've seen the annual statements if you care to look. But there's a point in time to the person that they wake up and say, my gosh, that's more cash than I thought I would have. Is that not true? It's
absolutely.
That's a beautiful thing. Yeah.
And it puts that discipline on you to keep making that premium payment, where if you were doing this comparable thing if you were investing in the stock market or what have you, where maybe you take a year off, or, you scale it back a little bit, or you have a loss and you're not as excited, right? And you just quit paying it all. This thing puts that discipline, right? And you see it grow. You see the results on the illustrations, on the annual statements. And not only am I not discouraged, right? I'm more encouraged to pay it. It keeps growing. It keeps getting better. That wheel keeps spinning faster, right? That exponential curve is doing what it does.
I love that.
I love it.
I do too. It's like the death benefit, and especially in the infinite banking footprint, it's like people diminish, devalue, don't consider the value of the death benefit. And there's absolute value. You can't buy it any other way. The cash value must equal the death benefit at age 120 in today's policies. My question is, do you want a little money at 120 or a lot of money at 120? Well, James, I'm not going to live to 120. Okay, well, the exponential curve that you mentioned, that curve exists. That cash value must grow to the death benefit, whether you live to 120 or not, right? So do you want a little death benefit or a lot? On a properly structured policy, and it does make a difference on the structure, you want a legitimate death benefit, not only because you may have obligations, whether they're business or personal, maybe you don't have any children, maybe you don't have anybody you love, but maybe you have institutions or entities that you do love or support and care about, and you want your support to exist beyond your life expectancy, beyond your graduation. You can't. There's no better way that I'm aware of to solve for that other than properly structured dividend paying whole life insurance. And I don't want to, go off into the weeds, but, the idea of discipline is akin to the death benefit. I don't really need the death benefit. I'm going to go out and invest in real estate or whatever, but there's no required investment from an investment company. Right? They're not going to bill you every year or every month to make an investment. You have to opt into that program, right? So it does require discipline, and it puts, in my language and my understanding, it puts form to your discipline when it comes to life. And that's a characteristic that should not be discounted. And I get early on when we all start, we're paying, where am I going to get the money? I don't know. right? I don't know. And you may not either. You might have an idea, but the future being unknown, you don't know. You have a good idea, maybe. Okay, well, if I'm going to pay a large premium, whatever it is, and they don't have to be big numbers either, but large to you, right, when you're starting, it's like, oh my gosh, maybe I am uncomfortable. That's a big number. Where am I going to get the money? But you did it. And then you had the discipline to continue doing it. That second, third, and fourth premium becomes easier and easier to pay, in my opinion, if things are done right and you have an understanding of what you're doing and why you're doing it and the structure is proper.
All right. And you see it. It's easy to see the result. Like you said, you get that in-force illustration and you compare it to the original, and they're different, but that number is growing. All of those columns are growing. It's doing what it does. And so why wouldn't you be encouraged to continue, right? It just makes sense.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.